What's good, chat? Welcome to the stream. Today we are on day 12 of trading. What are we looking at? We're not too bad, not too great. So we're up for the week. 254. Last week was quite tough. You know, started off strong and deteriorated. So yeah, today we're looking at. I've increased my risk tolerance to 300 per day. So I can take 6 trades on this account before it dies. So at the moment we are, what do we have? Price recently tapped into this fair value gap. It was a bit higher. It's been slowly eating away at it on the 4 hours. We can see 30 minute, what do we have? It tapped into it, a small breaker structure. It's slowly, what I noticed is slowly, there's actually this 4 hour fair value gap was a lot more bigger. I'll show you an example. It was a lot bigger earlier today. This is what it was at today. As you can see, it was like up here. But now it's slowly getting chunked, as you can see. It goes down here. So it's slowly getting chunked there, chunked there. So all these slowly getting chunked. So ultimately, I think the move is bearish. You know what I mean? So if I can find an entry to take a short, will be nice. We're in a sort of pullback phase at the moment, but ideally, I think shorts will be more optimal. Let's see, 4 hour fair value gap. I'll even just pop it here. Here we go, 4 hour FVG. Okay, one sec. Oh, I'll put it inside and in center for now. 4 hour FVG. I'll just save this. Fair value gap. Yep, cool. So, anyways, I am looking for a potential short opportunity. If we go down to 30 minute, we can see that this leg broke this low here. So realistically speaking, on the 30 minute, the breaker structure is actually here. Okay, if I look, oh, actually, lucky I just double checked. The 30 minute breaker structure, actually this might even not even be classified as a breaker structure. It could just be considered as a deeper mitigation. However, the issue is it's just been like this all friggin' week. Look at that. So this protected low, you might have assumed, oh, you know, maybe this is a breaker structure, but realistically speaking, it respected that and came back to the protected high. So realistically, it wasn't really a breaker structure. It was sort of like a deeper mitigation, in my opinion. So I wouldn't classify, you know, at this sort of point, I have to classify it as a breaker structure. Yeah, we look at the 1 hour, it is kind of breaker structure, yeah. And so this one here though, as you can see, 1 hour, it's not a complete breaker structure, and here as well, didn't completely close below it. So I'm just gonna put this one here. I'll extend it. I'll consider this one a breaker structure. I'll consider this one like internal protected low, realistically speaking, which gives us, which is fantastic. Our initial bias in the beginning was shorts, right? But as we look closer on this screen here, we do have a weak high. Technically, this leg didn't break, I guess, didn't really break this low. I mean, this sweep it swept it for deep mitigation, but didn't break below it. So realistically, we can look for a low time frame, weak high, weak structure point, which is this one. Let me just double check the 4 hour. Yeah, look, even that realistically isn't a strong clean break of this sort of area. So anyways, what I'm looking for now is potential longs. So look, our initial bias was short, but from what we've done and we've looked into a bit deeper, I'm gonna change my bias to long. So I'm gonna look for a long setup. It doesn't look like there's anything available for me at the moment. You know, not really much going on. So yeah, we shall have a seizies. So what I would like to see, I know it's gonna kind of might be a bad idea, maybe, I don't know. Look, low time frame is bearish, but if we sort of have a look at what's happening, there are deeper mitigations of this area. Like if we ignore everything on this side and we take what happened here, if we take what happened in here to up here, so let's say we eliminate that. So we had the protected low, got broken, and then deeper mitigation actually it came back and swung the top. The same thing's happening here. And this low here, technically broken, but it turns out to be a deeper, technically broken, but it's actually deeper mitigation, and it's gonna start heading up bullish in my opinion. So what I'm gonna probably try to do is look for longs targeting this internal low time frame protected high, and maybe for a longer hold for the external protected high here. But realistically speaking, it is choppy. And realistically speaking, on this lower time frame, now this is where we get into the weeds of it all. You feel me? We get into the weeds of it all. Okay, so we have this leg here, this strong leg. This leg put in a new low. Welcome to the chat. This strong leg put in a new low. It's come back up. Technically, everything that's happened in this channel here is still bearish, and as you can see, it did react off this level here and create a new low as well. See, this was broken as well. So technically everything's still bearish, right? But very important to note, this is an internal, this look right here is an internal structure. So internal being in the middle of a leg, in the middle of a move, there was a small pullback, and then it continued to go down, but then later it got broken as a change of character. So it didn't put in a new low. Like what we would expect is price to go down, pull up, go down, pull up, and then go down, but it didn't. In fact, it went down, pull up, pull back, down, and then it broke that. So that changed character signals a potential reversal. So what I'm seeing now is potentially a move upwards, and so that's where I'm going to start. That's what I'm going to start looking at. So we've got the change of character here. I want to look at taking longs because we've come into this deeper mitigation of this 15-minute protect the low. And so, yeah, ultimately, I am looking to take a long somewhere around here if it comes and respects pretty well. It seems to have this leg here, you know, after the market open at 10:30 here, it's just been bullish. Look, ever since here, market open 10:30, it's just been on a bullish move up, and then New York Stock Exchange open here. We've had a small move up, swept some lows here before moving up. So ultimately, we are in the business for looking for longs. Okay, I just want a small little target. You know, it might go ahead and break this, but yeah, look on the 3-minute chart. This is sort of the this internal protected high here. Internal protected high. We'll see what happens here. It'll be interesting to see. I would like it to sort of close above and then come back down here so I can take a long. That's the ideal right now. And then we can take a long into this high here, and that's it. That will be the trade for today. I'll actually bring it back to around there. So that will be the trade. Beautiful. It looks good, looks good, looks good. Low time frame change of character. Beautiful. It's a signal for a reversal on the high time frame. So now we can see both these two areas with just sweeps of liquidity. And yeah, I would say this protected high is a target, and that protected high is a target. So yeah, that is what is going on. That's what the setup is going to be. And yeah, cool. So nothing exciting to take at the moment. We're just waiting for price to come into a zone here. I would say the best sort of area to look for longs would be around this section here, in my opinion. We've got the chalk. I don't want to take a short here, like 4 hour Yeah, look, 4 hours showing some bullish momentum, and yeah, I want to take a long here. Put some music on for everyone.
Alright, check this out. I just dragged a task into a project, and this new AI tool built my entire week.
Beautiful. Alright, now we are literally just waiting for price to come into this section. I like the look of it. There's two options. I can either long from somewhere like here or somewhere like here, or I can short at this protected structure. I'm only taking protected structure setup, so what are my options? Which one is more probable? Which one sticks to my play? If I was to take a lower time frame continuation trend trade, this short is valid. If I was to look at the higher time frame bias or perspective, it really just looks like this low was just had a deeper sweep and not really strongly closed below, and therefore if we look even just here, we've sort of swept it, come back, and we've respected this area here to go for a long. So like two options is one, I long from here, which on the 15 minute, let me have a look, 30 minute. These are valid POIs, 30 minute POI. It's kind of POI here, most relative POI. I could take a long somewhere here. Let me just refine it. We're the most valid there. Something like that, or I can take a short up here. So let's have a refine. Yeah, look. Swept, break the structure, pull back into this arbitrary level. Sort of a breakthrough, low time frame chalk. I like the looks of longs, to be honest. I really like the looks of longs. I'm a bit hesitant because I don't want to force myself into a short here. Shorts are also possible, but look at this massive imbalance. Realistically speaking, price can continue to just keep on coming up before. Yep, price can just continue to come up. Price can continue up. Sweep some of that. Sweep all this liquidity, because look at this big imbalance here. Price could just come to sweep that up and then continue down if it was to. But I am looking to take a little pullback here and then take a long. That one's my sort of bias. Low probability. I'm gonna highlight that red. I would like to take this long here. Yep. So yeah, realistically, that's what I'm looking at. Both are quite valid, but see this side, we do have this weak high here. So price does want to come here. It does. The price wants to at least make its way here. So it could be this one. It could be this one. So anyways, from now I'm just gonna vibe out, wait for price to play out. You can change. Yeah, you can chill in the waiting lobby as yeah, at least sort of, yeah. And there it is. Okay, guys. Well, that's what we're sitting at the moment. You know, as you see, price is sort of continuing to come up. Realistically speaking, I don't want to take a random trade, but my bias is kind of long here, and the most valid sort of area might even be here at this point. If I want to take a low time frame trade continuation, it'll be this short. But look at that, that's a massive wick. Candle closure just then. Massive wick. That's a bullish sign. I'm going to anticipate some pullback before heading up. That's what I would potentially see. Potentially. What's the daily saying? Yeah, this could be a continuation upwards here to take this and continue up. Realistically speaking, we are looking for longs. Good night. Be right back. I'm gonna shower. Good night, though. See ya. I'm gonna shower. See ya. My stream will be on if you want. We'll keep it on there. Yep. Tight shit. Well, there it is. I was gonna vibe out. Be right back. I'm gonna get my dailies out later. Oh, hell no. Fuck that game. if price is trending, oh, turn the volume off on the stream because I want to talk into the mic as well, so you don't want to hit it twice. So if price is trending, you'll see it go one way, and there'll be a pullback. There might be play around here, might pull back or whatever, but then after it pulls back, it's gonna continue the trend, and then it might pull back here, wherever, and then it'll continue the trend, right? So what my strategy is, this is this supply and demand kind of ideology, not my strategy, but when after prices come and made that first initial impulse, so just to highlight it, you have impulse and then correction. Impulse up being long and then correction. Could play around here, but yeah, that's essentially the gist, right? So once after that impulse has been made, we have a correction to an extent before making new impulse. Now, the idea of my trading strategy is when price peaks at the correction area, what we call that is protected high, which means that price doesn't want to go a bit further because decidedly in this case, the sellers overpowered the number of buyers. The volume of people selling has overcome the number of people buying, or the volume of people buying. So price is shafted down, and so strong that it actually broke at this point here where the number of buyers overpowered the number of sellers, right? So that's why it's all supply and demand. So we hit a demand zone. We hit a supply zone here. A lot of people had too much stock or Nasdaq or whatever the fuck it is, whatever the asset is, came down, made a new protected low. So here's the protected low. And this point here, the number of sellers were exhausted. So this is all the sellers. Number of sellers were exhausted, or the volume of sellers, and the buyers overpowered. And so this has we call this a demand zone. So demand and supply. So when there's too much supply, market will sell, and then when there's too much demand, market will go up. And so the idea of this trading strategy is essentially when there is this, you've been able to ascertain a break of structure from a trending momentum. There's impulse, correction, and then there's an impulse. You've ascertained a break. There's three things. You ascertain the break of structure, a protected high, and protected low. All we need to do in my strategy to trade this is if price continues to come up, I can take a short of the same trend continuation. In this case, the market is moving down, so I can take a trade where I'm shorting the price in order to continue at protected structure. So I could take a short here at this protected high, or I can take a short here at this internal protected high. And that's a little something. There's external, which is all this big stuff here, the outside, these three orange, white, and black lines. That's external structure. But also, you notice how in here I drew little lines, stuff like that. That's internal structure. And so, realistically speaking, if I was to internal break there's an internal break of structure, and then you also develop a internal protected low, and then you also develop a internal protected high, and so it's sort of just, you can keep going deeper and deeper because the market is fractal. The charts ultimately are the same on the small time frame versus the high time frame. You zoom out, it's the same thing. It's just a stretch. You know what I mean? So, at this point in time, the idea that I can trade is like, well, what do we notice here? We've noticed the same thing, a break of structure. So there was impulse, right? Exactly what I drew, impulse. It corrected to the highest peak before making another impulse. So you have impulse, it's correct. Impulse of this. Yep. So you have the impulse here, and then it corrected here, and then impulse again, and all of this is still correction. It's just correction because we still haven't broken this little channel that I made. This orange, white, and black. Okay, ignore this thick black one. This is a higher time frame one. But we've got the channel, orange, white, and black. And if we look up here, orange, white, and black, right? And that's exactly what I drew. So you got the impulse, and then you develop after the impulse has been made, the bottom becomes the black one, right? The protected low. But what happens is when price breaks it, then it turns into an orange, a breaker structure, and I'll show you what I mean here. So in this case here, right, we've seen it before. Impulse, correction, and you see how this part here, if I was to sort of fix this up, ignore this green part here, but if this part was still protected, price didn't break that, it would remain black up until price breaks out of it. So imagine it comes here. This whole area here is still technically higher probability bearish moves. See how the trend overall is bearish, even though you might see this stuff coming up, it's more likely, it's a high probability, and trading is just a game of statistics really, and data collection. It's more likely that whatever happens in here, if you take a short, it's more likely, because you never know. You could short here at this point here, and it could go down. You could short here, it can go down. But I tell you what, you can't long here. If you take a long here, it's a lot lower probability because it can just shit the bed and go down, right? So what I'm saying is, once you've got those three things, so you've developed the channel, you break a structure, protected high and a low, or supply and demand. After this happens, at some point in time, price can play around here for yonks, and that's exactly what you saw down there. But eventually, once price breaks either the high or the low, two things happen. If it breaks the high, right, it goes that way, then what happens is the trend is no longer bearish. It's gone ahead and made a reversal. Officially, we call that a change of character, or chalk. So it was previously bearish, and now it's broke the high, so it's gone bullish. So we call that a chalk. But in the case that it doesn't break this high, the high is protected, and then instead it breaks the low, price comes down and breaks the low, follows the trend. And so what happens is this protected low turns into the next orange line, which is a breaker structure. And it's exactly what we're seeing. It just repeats itself, breaks the structure, and then the price continues to shit the bed, right? And then as it shits the bed, we've developed a protected high again. We choose the high swing point in that previous channel. We've developed another protected high, and then depending on price, if it goes down here, it comes back up. Okay, we've had a little reversal. This is our protected low. You feel me? And that's all we're doing. We're just following the trend. Another orange, white, and black, and it just keeps going on and on and on. And the more you zoom in and out, it's the same kind of shit. So in this case now, right? Now that you know what we've just spoken about, this is exactly what we just saw. Price came down, developed a low, pulled back, okay? Once it's pulled back, we technically have this protected high. And then over here, this little, as it pulled back, it broke structure again and developed a protected low. So it developed a protected low. So now you got the orange, white, black. Now in this case, as price changed, it changed direction and broke that protected high. So now we have a change of character indicating a reversal. So it's no longer bearish. We've now got a bullish move. Now, what happens is once a bullish move happens, exactly the same principle applies. You get the impulse, you get a correction, and then you get the impulse. And if that is what is happening, then what happens when we drop the orange, red, and orange, black, and white? So we've got the so with this one, if we looked at price just like this, right? If we saw something like this, we've got a breaker structure here. Breaker structure, because you don't know, it could have, if you ignore this and behind, price could have just been like this. So it could have come from low, pulled back, and gone up. Do you know what I mean? So that's a bullish trend. So anyways, it's broken structure there. We've gone up. We've made a protected high. Made the protected high. We've got the protected low, because those are three things we need: the orange, white, and black. So in this sort of channel here, things are more likely, it's more higher probability to take the long, because that's the trend that we're taking, right? So we wanted to take a long. We could take a long here, would be up. Anyways, now that price has broken that structure, what happens to this one? This one gets broken. This turns into a breaker structure, and then the opposite of the breaker structure is the protected low in this case, and then we've gone up ahead, and then we've pulled up here. Now we've got the protected high. Do you see what I mean? It's just repeating the same trend, and so the same thing is happening again and again and again. So just what happened right here, I just showed you breaker structure, protected low, protected high, and then that protected high got broken. So that's the next breaker structure, breaker structure, protected low, protected high, and in this sort of range again, this channel, you get the breaker structure, high and low, or supply and demand. What is more probable? What is more probable is taking a long, which is exactly what we saw here. What was more probable in this sort of 1, 2, 3 setup, this channel, was a long. And so two options. I can either take a long here, okay, which is probably most probable in this scenario. It's most probable. Or I can sort of zoom out a little bit, and instead of paying attention to the lower time frame, sometimes it's a bit more valuable to pay attention to the higher time frame. And so if I was to trade the higher time frame sort of structure, what do we have here? We've got the impulse, correction, impulse, and correction, same thing. And so the question is, do I short here on the external or the high time frame on the 15 minutes, or do I take a long here on the lower time frame, 3 minutes? Both are valid, but one is more probable. You know what I'm saying? And that's essentially it. That was exactly why I drew up two potential outcomes prior to me heading to a shower. I said it could short from here or it could long from here. Both of them were valid. However, I've made a decision that it's more probable in this scenario to take a long. Why? Well, the long in this case is more probable in the larger time frame. And I'm taking the assumption that in this case we've got the breaker structure here, and then what we call in this scenario, this protected low, if it broke down, if price actually impulsed down a lot more and then started correcting, that would classify in my eyes as a breaker structure like this. However, because price didn't evidently strongly close below, in my opinion, I consider this protected low to be respected. If it's respected, then what it says to me is, well, we're still technically in this orange, white, and black range. And remember what I said, whatever's in the orange, white, and black range, it's more likely to take the same trade, continuing whatever the trend is. And this scenario, let me have a look. If I zoom out a little bit, oh, look at this. It's a bullish trend. You got impulse, correction, impulse, correction, impulse, correction. And so ultimately, if I was to take, a trade in this sort of channel here, if I'm under the assumption that what's happening in this channel here is more likely to be bullish, then I'm going to be taking longs. However, if I want to zoom in and, take trades within this channel, then I'm going to be taking shorts. You know what I mean? The other way around. In this case, I'll be taking longs on this internal. I could take a long on this internal, and this trade, this sort of channel here, or I could take a long on the 15-minute, and that's why I said my bias is longs, because probabilistic speaking, both the low time frame is pointing towards a long, and the high time frame is pointing towards a long. But that's essentially what it is. So why did I choose the bias longs? Because on the low time frame, it's making a bullish trend. On the high time frame, it's also making a bullish trend. So even though taking a short at this protected high, which I drew before, this orange, white and black here, a short is a counter trend trade. It's lower probability, but it's still valid. And that's the point. Yeah, so in the end, my bias is longs because I want to take a pro trend trade, something that's positive, something that's going with the trend, because it's more probable. And if I was paying attention, if I didn't have a shower, if I didn't log in late on the computer, I would have been able to maybe even capitalize on an entry here and be done for today, but I haven't been able to do that. So yeah, and that's it, man. That's pretty much where we at the moment, I'm pretty itchy for a trade because I sort of want to get up. But I'll show you my stats for this account. I'm actually pretty bad. This last week was pretty bad. Last week I was down on the first day. I was up 1.2k, and then I lost 4 days in a row, 700. So not that great. It was pretty bad. This week I started off with a loss, but then yesterday and the day before up 200 each day. And I'm happy that I've started reducing my risk sizing. So obviously you see last week I fucking got pounded. Overall I was down 1.6k. But yeah, for this week I'm up. Yeah, and that's it. It's just I've sort of had to realize that it's all about small consistencies than bigger fucking trying to hit home runs. You know, I was trying to, and if you watch, and this is the most annoying fucking thing, right? On these 3 days where I'm down 700, 709, 784, if you watch the streams, and I've noted them anyways, on these 3 days, I was floating about $1,000 profit here. I didn't close and take it because I was greedy. I wanted to go for 1.5 or something. This day I think I was up 700. This day I was up 1.6k, and I still didn't close out my trade because I was greedy, and that's the problem with trading. Because I was up 1.6, but you know what, Will? I was aiming for 2.5, and that's just the. Come on, man! How greedy, bro! How greedy! Yeah, and so that's what I mean. So what I had to do is I had to freaking tone it down heaps, and now I'm just doing these. And now, you know, this is my 150k challenge, but I have 5 of these funded accounts. These are actual funded accounts, and so I just need 2 more days of at least $200 profit, and I can withdraw profit from it. So that's good. That's good. Yeah, and so yeah, at the moment, honestly, I'll be honest with you. I think the goal is to try and get 1 payout before end of financial year, which is a month and a half away, which is doable. 1 payout. I only need 2 more green days, really, but I want to make sure my first payout is 5k on each account, which is 25k USD. So it's gonna take me a couple weeks, but I'm just trying to slowly pro about it. Yeah, aim a bit lower. Yeah, cause bro, it's so fucking demoralizing. When I'll show you what. I'll show you what happened, man. It's annoying because I make the same error every single time. Let's see. So I started, as you can see here, this is me, bro. Up 4.5, up 1.2, up 1.7, 1.5, 1.2. I'm pretty sure it's day 6 here is when I start fucking up, and day 7, day 8, day 9. So let's have a look. I'll just show you real quick before we head off. Let me have a look. Yeah, look at this. Look at this trade, right? So I am floating 200 bucks profit to let me have a look. Floating 150. Oh, actually no, this was a bad day. I actually pretty much I remember wicking out. This is the one I was up 600. Yeah, around here. Up 400 or 425. I was floating around that much. Around here. So $700 profit. I was up 700. I could have closed out with a profit. 700 times 5 accounts is 3.5k US. But I didn't. I got greedy. And you know what happened to greedy people? Boom, lose a trade. Oh hell no. So as you can see, I'm down the whole 5 point something. There was that one. Next day, oh my god, I've already got the timestamp here. I'm in the trade right now. You can see I'm in the trade. Took a L yesterday, so I was like, oh man, I don't want to repeat it. And in my head, I'm thinking, man, I'll aim for something a bit better. Next minute, and look at this. Oh my god, how greedy. Look at this. I'm up, what am I? Up 700 now on one account. I'm up 700. This is the morning, look at me. I just woke up. Up 700. And then I go fuck off. And then I'm pretty sure I might have gotten wicked out. Okay, let's see. And then I scale in. The problem is I keep scaling in. And what it does is it reduces the size of my stop loss. If you look at this red line here, this is my stop loss, right? If price pulls back to that, then I lose 600 and I'm done. If you pay attention, in the beginning, where was it, right? Let's have a look. In the beginning, my stop loss was around here, just under these two sort of little bits there, and towards the end, if you keep watching it, I believe this one I got wicked out. I just got wicked out and I lost. Oh no, it's still there. And this one I didn't scale in later. I just didn't take profit. Look, it got all the way up there, and then it didn't take profit, and it comes and closes me out for a loss. It was literally sitting at. Look, I'm watching it closely, more closely, and you can see I'm just fucking. Oh my days, 40 minutes, and I lose, and I'm salty, because I'm just thinking, man, I could have fucking played this better. I was up how much, and then this one is probably the worst one. This is the one where I'm up 1 point. Look, even now I'm up 1,000. I'm up 1k. Actually, at the peak of it was, yeah, 1.7. I'm literally up 1.8k, 1.7k, bro. Come on, man. Why did I TP? That's the question of the day. I don't fucking. You can see I'm flying 1,700 times that by 5. Oh my days! Don't even get me started. But I got greedy. And you know what happens to greedy people? Yeah, bang. Watch, I'll show you the moment I fucking actually L, because that will fucking, you hate to see it. Look at this part. Look at me. Look at my face. Down 536.40 when I was up 1.7. I'm pissed. Because I'm like, bro, price went all the way there. See, my target was at this protected low. I'm thinking it'll come down here. Hell no, that shit went around here. At this little swing, I should have been a bit more mindful, and then it chose to go up. So that was my lesson. I realized I can't be too greedy. Look, I'm even analyzing it right now. The whole reason why I'm streaming is so I can analyze my tapes, and I could see now that I was just fucking. I should have just TP'd. And then, anyways, you know what happens? This is what happens, right? So in the end, I take a long. I bet long. I'm pretty sure I'll go to have a shower, and I'm up. I'm floating $480. Floating $480. I come back, floating about that much, and then I fucking look. I'm up 530, and then I close my trade early because I'm like, you know what? Let me just lock in. So right now, I locked in the profit 530. So I'm up $75 for the day. So I'm back to square one. You know, I'm up a little bit. Even though I lost big here, I won it back here. And then in my head, I'm thinking, okay, I can do one more trade here at this protected high, this external protected high, and then say, you know what happens to greedy people? Oh hell nah. Look at me, I'm salty as fuck. I'm tweaking. I get closed out. And I lose the 700 for the day. I get pissed. And then yeah, that's it. Look at me. I'm literally just sitting there. It's like what, 1:42 a.m. on a fucking Friday night or Saturday. Yeah, Friday night. Thursday night. Friday morning. And I'm just like fucking annoyed. And then I get closed out in the end. Cause even in this trade here, and this is the last trade I had the opportunity to take a little bit of profit off the table. I had a little small sliver of an opportunity around here, I believe. Oh, around maybe right in the beginning of the trade. I could have taken profit, and yeah, up there I'm up 355, but I was like, nah, I want to be greedy. So, anyways, that is it. That's that. Not really much going on in the market now. So really, the market's sort of quiet down. I don't think I should trade today. Realistically speaking, I don't think I should. I want to. I'm really itchy for it, but if it's not giving me the trade, then I shouldn't. I really shouldn't. I missed the opportunity. I went for a shower. I could have shorted this protected high. If I did, realistically speaking, I would have probably had a stop loss maybe around here, 35, and it would have been a 2-to-1. So I would have probably 2-to-1 there too. 2-to-1. So I would have actually won. I would have won something like that. So that would have been a trade. And look at it, as you can see, if I had that too, I risk $300 to make 600, and I would have won 600, and I would have came back to the charts, seen that at 12.21 and then clocked off. Go to sleep. $600 times 5, $3K for the day. US. Stimulant check. But anyway, it's fine because you know what? Tomorrow is Friday and I can trade during the day. So I'll wait for a trade during the day. Yeah. And yeah, that's what it is. That's what it is, Kerr. And I've actually started teaching Rachel a little bit how to trade because, you know, yeah, she tuned in. And so, yeah, she's good. She's starting slow. It's pretty hard, man. It's pretty hard. There's a lot to take in. Not to forget that, you know, this is the easy part. I mean, I don't know. I won't say this is the easy part, but the part that's a lot more work is the back end stuff, like journaling each trade. Like this is me, right? This is me. After each trade I take, I have to jot down data. I collect data so I can further understand how my performance is. Just like, look at it. All these little factors I take into consideration. I measure it. So, okay, so like for example, if I wanted to see how well I'm performing at a certain strategy, or like how many wins I've had, okay, so I would filter by the wins and say, okay, what is the correlation in the wins that I've been having? Trade 1, 5, 9, 12, I've been winning, and I've won, I risk 1 to make 1.98, or on average, well I guess in total, I've risked 1 to make 9, and that's great. So I can see the percentage wins here, and then also I can look, okay, what is the correlation between my losses? And this is the best one. Reviewing your losses is a lot better than reviewing your wins. Anyways, I can see that, okay, a lot of my losses I've been taking risk entries. Risk entries when you don't wait for something to confirm. Like if I AFK'd and set up my order here, technically that's a risk entry. And supposedly I am more prone to losing by taking these. So that's a piece of data to collect. Was I calm? I can see most of the times I'm calm when I lose, but even these two instances I lost, I can see what was the reason for my loss. Was it my tight stop loss? Was my directional bias correct or incorrect? Was I following the plan? Shit like that. And then also, you know, what did I learn? And so I can keep learning. Keep a loose stop loss and maintain it. Do not scale in until the internal breaker structure has been made and retest of point of interest. And so this is the hard work. This is the most tedious shit. You're not gonna like. I fucking hate it. I always procrastinate. I'll show you my past data collections. I've been doing this for yonks right now, for a year. So this is my data collection since May. In this journal here, I was doing okay. I was journaling since March. As you can see, I did collect a lot of data, which is great. But then halfway through, I just stopped. I can't be bothered. And this is just what I mean. This is the gold here. The data collection is the gold, man. If I really stuck through it and got all the data, this is 3 months worth of data. If I just filtered now of my losses and actually looked into it, okay, Brandy, why are you losing? Let's look at the correlations. It looks like, for example, I lose a lot of my trades. I'm losing on Wednesdays. Maybe I should stop trading Wednesdays, for example. Or a lot of the times I'm trading, yeah, it can be that granular. A lot of my losses are during the Asian session. So that's the Asian session is when the market opens up between, in our case, 9 a.m. to 5 p.m. That's when Tokyo opens up their stock exchange and their markets. And so it looks like a lot of my losses are in the Asian session. Maybe I should stop trading the Asian session. You know what I mean? And this is where it really comes down, because every trader is different. And you'll learn this. If you want to pick this up, I can teach you. But you'll learn that I'll teach you the basics and the concepts. But when you start to realize maybe you like counter trend trading, maybe you do better. And this is me. Look, this is what I personally found as well. I actually, based off my data, I'm filtering by the wins right now, right? So based off all the times I've entered in a win, I can see that a majority, just on a quick glance, a majority of my wins are counter trend trades. So all these ones counter trend. I'm counter trend king at the moment, it seems like. So what I realized is that I'm actually pretty good at taking a counter trend trade. And so things like this, am I taking entries off the 3 minutes? Am I taking entries randomly? Am I taking entries off the 15 minute or certain Fibonacci levels? You can get as deep or as wide as you want, and that's the hard thing about trading, bro. This is why everyone takes years and years to become consistently profitable, and that's why I've dedicated the next 3-4 years to just becoming profitable. And I feel like you won't lose if you don't give up, and if you're honestly putting in the work and getting better and trying to improve every single day, I don't feel like you'll lose. And so I started this last March, man. It's been over a year. Yeah, I haven't gotten profitable yet, but I've improved like from absolute garbage. Like realistically speaking, last time I traded was fucking doing shit coins, and that's not really trading. That's just like gambling, right? And so sophisticated, day trading is different. And I can show you all the data. Look, if we look at my trading data, this is how far it goes. June, I started recording shit in June, July last year, and we have various versions. This is iterations, multiple iterations of my journaling process. Look at all this. I couldn't even bother. I didn't even fill out half this shit. This is my version 1, version 2. This is where I think I started incorporating. I was trading the Aussie dollar. Version 3 is pretty shit. Version 4, I started doing Nasdaq, and then I started sort of giving myself entry criteria to check. I had a checklist before every time I would trade, and you can see October. This is a bit October. In Australia, is more October. Last year, November. We'll go to November now. Aussie dollar, and as we keep going, February this year, March this year, and then I even tried for a period of time forecasting, and this was kind of like a small phase. I'll show you. For about a month and a half. Yeah, from February to March, you can see it's fucking insane. There's a lot of work. What I would do is every single morning before I hopped into the chart, or before I sort of got to work or started work or anything, I would look at the market, and based off my analysis, based on my understanding of how to trade, I will make a decision of whether I think it's going to go up or down, or long or short. And so what I did is I tried to make it as intricate as possible. I started doing an analysis, taking screenshots of what it would look like in the morning beforehand. So this is what I took a screenshot of. I said yesterday's daily has formed a strong doji, and today's Asia session continued bearish. Price came to the protected high, so price came up here and respected it, meaning we have a 4-hour internal weak low to target, which is why I circled this thing. And I said my bias is shorts, okay? So that's what I did in the beginning of the day. And as I look later, it did come down, and it actually went towards almost where I circled, and then it reflected up, which is fine. My bias throughout the day was correct, and that was what was important to me. And look, even if we look at the 15 minute, I drew this red line. I don't know if you can see, I drew this red line, and we look at the next picture. It price went exactly through the red line, like it came down, not like in terms of price, but it went past where I anticipated to go at this point here, and then eventually reversed. So if I had traded throughout this time frame, then I would have been most likely to win. And so I started building up this muscle of trying to forecast. Later, I realized it was kind of irrelevant, and you start. I don't know. As a trader, I've been listening to audiobooks and stuff. They say traders aren't predictors or aren't forecasters because it shouldn't really matter. You come to the markets to display your trading model, and that should be it technically. But yeah, this is what I did in March and February. A lot of work there, and then I sort of did a little bit of Aussie dollar trading, but with forex currencies, I'm kind of ass, bro. If you actually have a look, I'm pretty sure I'll lose a majority of shit. Lost, yeah. So I gave up with Aussie dollar. I can't be bothered, and I found my little niche. I've sort of settled on Nasdaq, and so that's where we at. And look at this. Ooh, price just sort of come into this sort of area, and if I took a long, it might have been the sort of, I would target this protected structure here, because like we said, low time frame, break a structure, hits that protected high, comes back, and then we can anticipate a long here to potentially break that, or a long here to potentially break that. But either way, I am more likely to take a long in this kind of section. So yeah, that's what it is. And like, there's a lot more nuance to it, bro. There's like you can go. There's a lot more nuance to the trading strategy itself. It's not just long anywhere. Like, if you really wanted me to do a in-depth analysis, what I would be doing is saying, okay, well, I would take this candle. So what we call this institutional candle. I would have looked at the last down candle that printed before the price moved up. Okay, so we call this a point of interest or an IC or whatever it is, whatever the fuck it is. But you ideally want to choose the one that's most relevant. In this case, it could be, it would be this black one here, because this is the last time price went down massively before price continued to break structure. So anyways, if I was to do a proper analysis, I would highlight on the 3 minute this point of interest. I would look at it at setting my entry here and setting a stop loss outside of the protected low. And then from there, I'll target something like this. And so my risk to reward, I'm risking $300 to make 1.79 times that. So risk 300 to make 500 pretty much. And that would be my trade. Okay. If we didn't see all of this, so if I was to take this is the same chart, by the way. I'm just flicking different ones here, ones there. If I was to look at something like this, same chart, we have the 3 minute breaker structure. I'm actually going to replay it. This is a cool tool here. I can take it back to around here. I'll take it back to like, maybe here, right? So this would have been the protected high, 3 minute protected high. We would have had that, as you can see, this really small, delete this shit, delete that. I gotta keep that on fair value gap. I would have drawn up, if I was paying attention, I would have drawn up, okay, one, we have an internal break. We've created a small protected high. Okay, look, I'll even go back here. So if we didn't see anything, we just saw this, right? We have the impulse, we have a correction. Opposite of this correction is the protected high. And then it made another impulse, and we've got the protected low there, right? And then as price continued to play out, boom, it broke that. Okay, so now we have a change of character. That indicates to me a reversal. So the reason why this is orange is because it's interchangeable with the the reason why this is red is because it's interchangeable with the orange. It's sort of the same thing, but the red indicates that it's a change of direction. But it's still a breaker structure. Okay, still a breaker structure. So now that we've got the breaker structure, we can just pay attention to this, right? So we've got the breaker structure here, we've got the protected low. And then I'm just gonna reduce the speed. So now we've got the protected low. What's gonna happen to price? It's gonna trickle up. Okay, we've had a reversal, so now we've got a protected high. Okay, and so now what I wanna do is I wanna look for a valid long. So there's a few ways, right? There's a few ways. One is I can take the concept of point of interest, which is that POI, the last opposite candle that right before it created the move. That's what we call a POI, point of interest. I would set an entry somewhere within that point of interest, okay? And then I'll set a stop loss sort of outside the protected structure. So in case, price, may just tap into here just a little bit and then go up, you know what I mean? So sometimes I do that. So that's one way of entering. The second way of entering, and this is something that I've sort of dug out as of recently, is two key levels of what I've done and analyzed. Is one, the 50% Fibonacci level seems to be a pretty decent spot that Nasdaq likes to bounce off. Okay, most times it will come to 50%. Most times it will come to 50%. It won't necessarily bounce off it, but most times it will at least come to 50%. More often than not, though, what I've realized it is that it will come to the 0.618 Fibonacci level, so around here, and then continue. And then let's actually see, because I actually haven't analyzed this, but let's actually see what would have happened. So if we were to trade this, so 3 minutes, okay, it's sort of printing at the moment. Oh, tapped into it. So price tapped into the 0.5 Fibonacci level. So if I had a trade set up right here, it would have triggered me in. See, I set my stop loss, so I still would have been in. And let's just see what would have happened, right? I would have targeted that protected high because I want to follow the trend. Right? So I target that. Let's see what would have happened because I actually don't know. Bang! I would have won. Okay, so I've risked $300 in this case, which would be this, to make 2.97 times what I've risked. So I would have risked 300 to make 900, and I would have won. If I paid attention, if I was on the charts, I was taking the misses home, so I couldn't. But if I was paying attention, I could have had an entry here, or I could have had an entry here, or I could have had an entry here, really speaking, right? So there's one. And that's fine. I miss it. This opportunity comes and goes. It's fine. Now what happens? What happens now? So we've had the break of structure. This protected high now turns into a break of structure. And what happens at the opposite of a break of structure? We have the protected structure. So this part becomes the protected low. Now, the same thing happens, bro. We're just waiting for it to continue up. And then once it starts reversing, okay, I think that's a reverse there. So we've got the reversal. So now at this peak here, we've got the protected high, right? Same motherfucking thing happens. There's three things that we can look for. We can look for the POI, point of interest, at the last opposite candle before the move is made. So I can take a long here, somewhere around here. I can speak more about refinements and stuff later. So I could take a trade there. I could take a trade at, I would choose this point here to the swing at the 0.5 Fibonacci or the 0.68. And yet again, I could have done the same thing. I could have taken a trade here, covering just about outside that range, targeting there. Okay. Or same thing here, entering at around that 6.18 Fibonacci level. Pull it out a little bit so you can see better. Yes, I could have entered around that 0.5 or entered around that 0.618 and targeted there. Now let's actually see what does happen. So the next candle happens. Actually, let me just go one by one. So if I was to, okay, hold on, right there, we shifted. We entered here. See how it wicked there? We entered here on the 0.5, and let's see if it stops us out. Next candle, we're still in. Oh, actually, this one we just got triggered in here. So let's see which one's more probable. What would have happened to either of our trades? So we're still in. Market's still playing around. Oh, and there it is. Okay, so we would have lost. And so that's what I mean. If I had taken the 0.5 Fibonacci trade here, I would have won. If I would have taken the 0.5 Fibonacci trade here, I would have lost. Why? Multiple reasons. One could be the fact that based off statistics, statistically speaking, 0.5 Fibonacci level may only work 30% of the time, and this happened to be one of the 70% times it failed. Another reason why it could have failed is that maybe if we zoom out, maybe it was due to the fact that we actually approached this external protected high. This actual protected high here has more weight, more value than this one here. So this one here, yes, it did come, price came up to here at this sort of internal protected high and then pulled back to 0.5. Maybe that's why. And then this one here, it hit this external protected high, but it just, the number of people selling at this point was greater than the number of people buying at 0.5 Fibonacci level here. You feel me? And so in this scenario here, look, I've already drawn up the three types of trades I would have taken in this range, right? I would have potentially taken the 0.5 Fib, 0.618, or this one, this POI here. So let me delete these two so it's a bit clearer. Literally this box here that I drew up in the beginning, look at this. I put this trade here, it would have triggered me in, okay? And if I had taken that trade, who knows? In the next 20 minutes, it could have TP'd. And that's essentially how I trade. So, bang. I collect the data so I can understand which one is more valuable, or which one plays more effect. Does a 0.5 play more effect, or is more statistically likely to win in this scenario? And I have to, and that's why I map out every single detail, because I want to know, okay, like if I was to just zoom into this thing here, yeah, it gives me some information. It tells me that 0.5 would have lost, 0.618 would have lost, POI could have won, but it doesn't give me context. It doesn't tell me that, look, we just hit a protected high on the high time frame, or look, we are in a sort of rangy movement of the 15-minute, or look, it doesn't tell me that we are in a massive, we just had a break of structure on the 4-hour and then we're in a pullback phase. Do you know what I mean? So part of training is understand that, look, your idea of what you think may happen in the market is so different depending on the scenario of everything every single time, but you can systematically calculate it and sort of draw conclusions of that in the greater time, I guess, in the greater scheme of things. After a while, you're just gonna realize. At the moment, I've been hitting these fucking dubs. Like if you watch those videos on the YouTube, those days where I lose, man, if you actually watch the videos, those days I lose, I actually like call where I think it's gonna go. It's I think 1 out of the 5 recent ones, I call where it's gonna go. I enter a trade. I have my stop loss too tight. I lose the trade, and then the price ends up going the exact way I called. But the reason I wasn't in that was because my stop loss is too tight, and that's a problem that I've been having. And so a lot of the videos you see, I actually call it. I fucking call where it's gonna go. I call it to the T, and it goes exactly where I think it's gonna go. And that's another thing with trading, bro. The fucking mental side. You gotta make sure your mental is good. You gotta make sure, not only your analysis but your psychology. Can you avoid the greed? Can you avoid the fear? And then obviously I can't. That's a problem. Yeah, and it is hard. But once you get the hang of it, once you put in the hours, you'll start like getting consistent dubs. Like look at this run here, a generational run. 1, 2, 3, 4, 5 days of dubs, like juicy dubs, right? And then it's to start losing for 5 days or 6 days. But the more hours you put in, eventually you can start calling the wicks. And this is the most insane. I'll tell you right now, this is the fucking biggest insane analysis I've ever made. This one here, I made a massive trade, right? I did an analysis exactly what I just showed you. Look at this. Break the structure. I highlighted the POI, literally exactly what I just told you. I highlighted the POI. I'm saying price could hit this POI before it goes up, right? So if I'm in a short position, I'm going to short into it and then I'll take profit. Because in my opinion, my professional opinion, we can see break a structure here, price moves up. Break a structure here, price moves up. So statistically speaking, longs are more likely. But I took a counter trend trade, right? Took a counter trend trade and I analyzed the market. Within this external within this massive leg, I'm pretty sure I did an analysis saying that this little line, this take profit line I drew was actually 1, a fib level, 2, a POI level, and 3, a fair value gap level, right? So as you can see here, let me just show you exactly where, because I fucking call it. This is the most beautiful trade I've ever had, and I'm keep going back to it, man. It's so beautiful because you wouldn't believe how accurate I was. You wouldn't believe it. Like you can see here, I'm taking like overall the high time frame is bullish, but I've chosen to take a short. Alright, I've chosen to take a short. And then so at the moment I'm waiting for it to lock in. Actually, this is funny. You can actually see my face. I'm just having a chat. Anyways, I'm waiting. I got my limit order here. I'm trying to take. Look, as you can see, there's a breaker structure. We've got the protected high, protected low. I'm taking a lower time frame pro trend. So as you can see, lower time frame is bearish. So I wait for it to tap me in, right? So this is actually a pretty good trade. Look, it just taps me in. I set my stop loss outside of the protected high. This entry area, as you can see, I didn't draw it up, but you see this white candle here? This white candle is that point of interest thing that I was telling you about. It's the last opposite color candle before the move. So I highlighted this. And I set a limit order there. Okay, I set a limit order there. I was only risking $200 here, 210, because that's how much risk I had left. This is a fucking like Just insane trade. So I risk $200 and I take the short there. It enters me in. I'm in. I'm like, cool. I don't wanna psych myself out, so I'm just gonna journal. But I had my eyes on the charts, right? So had my eyes on the charts. The price is playing out well. Okay, it's playing out well. It didn't wick me out. Price has gone the right way. I'm like, okay, cool. It's gone the right way. Let me just scale in a couple more contracts, and then so that's when I start to scale in a couple more contracts, and then I have a look at where price might TP, and so I set this profit target here, right above that POI on the higher time frame. And then in the end, you know what happens? I'll cut to the chase. I scale in a couple times. That $200 risk, eventually, I just move that $200 risk lower and lower. Like I scale in, as you can see in the original trade, I had my stop loss up here, but as I enter in more positions, I'm shorting more. I have to tighten my stop loss. And then right at the end, price comes beautifully to tap my, look at that. Oh my days. It just wicks me. It takes my profit. Like it takes profit and then it starts going the opposite way. Like look at this. This is the moment here. So I risked $210 to make 2.2k. And I'm sitting there. I drew up this fucking spot right here at this line and watch right here. So this is where it gets good. Wait for it. Boom. Takes my profit. And I'm like, damn, is that it? I'm out. That's crazy. Look, it hits that line perfectly. And I watch it, right? I watch it. And as I watch it, price starts going the opposite way. And bro, Will, when I tell you, later, the next day I checked, price goes all the way up here. All the way up. So I fucking bottom ticked it like a beast. I called the top, called the bottom. Oh my days. That was the best trade, most beautiful trade I've ever had. Crazy bottom tick. That's why I even call it crazy bottom tick TP. And that's it, man. That's that fat juicy. Oh, Will, I'm telling you, cuz. Yep, and look at this one. As we keep watching, it looks like it's actually playing out, man. Actually, this is actually a good sign. It actually might continue going up at this point. If I had traded, yeah, it would be. We'll see what happens, man. We'll see what happens tomorrow. If I was a betting man, I would say one, it could TP there, and if so, that would have been $500. Two, it could come here. Price could come here, and then head up. So price could go down here, close me out there, and hit this before heading up. If so, that would have been a $1,200 $1,000 trade right there. Or worst case scenario, like I said, lower. The other bias is the short up here, this protected structure here. So those will be my three sort of guesstimations, if anything. So we'll see what happens tomorrow, man. I could, but yeah. Yep, and there it is, man. Yep. What are you doing tomorrow night? You gonna be on? Yep. Well, yeah, I'll be here at night to do trading. I gotta go do boxing tomorrow night. But yeah, apart from that, you feel me? It's gonna be good. I might even take a trade during the day. Are you working during the day tomorrow? Okay. Well, I might do a trade during the day. If I do, I'm gonna live stream it and we can suss it out later. On that tomorrow night, anyways. Alright, my G. You know what the 40, it's a good session tonight. Yeah, we'll dig in more, man. Like, if you can be less greedy than me, then you'll be more successful. And that's exactly what I tell Rachel. Rachel is a lot more less greedy, so that's why I'm saying she'll be a lot better than me at trading. That's why I suggested to her. But the only problem is, it's a fuck ton to get your head around, bro. It's a fuck ton. Understanding the strategy, learning the strategy well, and mastering the strategy at least bare minimum, took me 8 months. And then 6 months of refining the journaling process, refining, getting consistent with it, That's 6 months. So at the moment, I'm really close. Look, really close to profitability. After I win 2 more green days, I could make a withdrawal, and I could officially say I've made my first, taking money from the markets. Apart from that, I've been fucking sinking monions in, just learning everything and courses and everything. Yeah, well, not courses. I paid for this mentorship from Trading Pool. Was about $100 a month. So yeah, that's what it is. Yeah, it helped. So I learned parts of his strategy, as well as adding it to my own parts of his. So yeah, so that's what I mean. So this is the sort of supply demand. I add some fib levels into it. I add some other stuff as well. So yeah, a little bit of mix, but yeah, that's what it is. Yeah, but wait, last thing before we go. Look, if I had taken the short at this protected high, there was 2 options. I would have taken a flat 2-to-1 risk to reward, which would have locked me out pretty early, like right here, around here. Or secondly, the other option is a 0.5. Remember that whole thing about the 0.5 fib? I could have taken 0.5 fib here, which would have locked me as well for a profit. Look at this. It actually plays fucking perfectly to it. I would have entered here and then drawn the Fibonacci to that 0.5. It would have triggered me in. And it would have taken profit right there. It bounced right there. That's what I mean. You hug in, you know what I mean? So technically, this 0.5 fib continuation worked. And then technically, if I was to do a 0.5 continuation at this leg, could have potentially worked right here as well. So, you never know. But yeah, I'll leave this on. We'll see how it marinates over the next day, G. Yup. Okay, my G. That's what it is. My guy. I'll see you tomorrow night. Could get a little rest, G. No, I'll hit you more, bro. I'll hit you more. Don't worry about it. You gonna get a gear. I'll stuff you like a chicken. Well, yeah. All right. Good night, Willow. Thank you.